La storia siamo noi, nessuno si sente offeso. Siamo noi, questo prato di aghi sotto il cielo. La storia siamo noi, attenzione, nessuno si sente escluso. La storia siamo noi. Siamo noi, queste onde nel mare, questo rumore che rompe il silenzio, questo silenzio così duro da raccontare. Però la storia non si ferma davvero davanti a un portone. La storia entra dentro le stanze e le brucia. La storia dà torto, dà ragione. La storia siamo noi. La storia siamo noi, nessuno si sente offeso. Siamo noi, questo prato di aghi sotto il cielo. La storia siamo noi, attenzione, nessuno si sente escluso. La storia siamo noi. Siamo noi, queste onde nel mare, questo rumore che rompe il silenzio, questo silenzio così duro da raccontare. Però la storia non si ferma davvero davanti a un portone. La storia entra dentro le stanze e le brucia. La storia dà torto, dà ragione. La storia siamo noi. La storia siamo noi, nessuno si sente offeso. Siamo noi, questo prato di aghi sotto il cielo. La storia siamo noi, attenzione, nessuno si sente escluso.
Ancora qualche minuto, scusate, ma...
Questo rumore che rompe il silenzio, questo silenzio così duro da raccontare. Però la storia non si ferma davvero davanti a un portone. La storia entra dentro le stanze e le brucia. La storia dà torto, dà ragione. La storia siamo noi. La storia siamo noi, nessuno si sente offeso. Siamo noi, questo prato di aghi sotto il cielo. La storia siamo noi, attenzione, nessuno si sente escluso. La storia siamo noi. Siamo noi, queste onde nel mare, questo rumore che rompe il silenzio, questo silenzio così duro da raccontare. Però la storia non si ferma davvero davanti a un portone. La storia entra dentro le stanze e le brucia. La storia dà torto, dà ragione. La storia siamo noi. La storia siamo noi, nessuno si sente offeso. Siamo noi, questo prato di aghi sotto il cielo. La storia siamo noi, attenzione, nessuno si sente escluso. La storia siamo noi. Siamo noi, queste onde nel mare, questo rumore che rompe il silenzio, questo silenzio così duro da raccontare. Però la storia non si ferma davvero davanti a un portone. La storia entra dentro le stanze e le brucia. La storia dà torto, dà ragione. La storia siamo noi.
Global uncertainties. evolving challenges for people and companies. In this context, we are delivering our guidance and strengthen the financial structure of the group. We keep growing while leading the energy transition, confirming our strategic pillars: profitability, flexibility, and resiliency, efficiency and effectiveness, financial, environmental, and social sustainability, focusing on cash generation, and putting safety first in our operations. We keep creating long-term value, focusing on our core activities and countries, investing in digital and climate-resilient grids, decarbonizing the energy mix through selective investments in renewables, maximizing value while reducing risks, keeping customers at the center of our value propositions to fulfill their needs and make their lives easier. In our countries of presence, we build strong relationships with local institutions and communities to create long-term value. We build the future through sustainable power.
Good morning and welcome to Enel 2025-2027 Strategic Plan presentation. Welcome to the people here in the room with us and one connected. I'm here today with Enel CEO, Mr. Flavio Cattaneo, and CFO, Mr. Stefano de Angelis. May I have the agenda of the screen? Thanks. Here we are with the agenda of today. Our CEO will drive through the plan strategy, while the CFO will go deeper in financials. After the presentation, we will have the Q&A session, restricted to the people here in the room. Thank you, and now let me hand over to Mr. Cattaneo.
Thank you, Omar. Good morning, and welcome to our 2024 Capital Market Day. I start from the result achieved this year. The solid performance reflects our ability to deliver our promises and confirm our guidance for 2024. We've implemented the strategic pillars set last year. Our disposal plan has been successfully completed. We refocused on our core businesses and on investment with higher returns to improve the capital structures of the group. We met the debt target, enabling the long-term, sustainable and more profitable growth. These results are visible in total shareholder return, higher than the sector, and we are now ready to start a new chapter in our strategy. Let's have a look at the energy context before focusing on strategic drivers of our plan. Electricity is set to play a leading role in the energy transition. Electricity consumption will increase, driven by the electrification of industrial and domestic uses. The rise of electric mobility and the increase of power consumption of data centers. Renewables are expected to grow massively across all transition scenarios. And, let me say, energy system will require baseload technologies and storage to match the demand and minimize price volatility. The new market design and the regulatory framework will be necessary to remunerate investment and sustain renewable growth. Beyond everything, certainly, the transition to renewable will happen. In this context, the role of grids is extremely clear. Distribution networks are the backbone of the transition under any policy scenario. They will require high investment to host the growing renewable capacity and increase resilience to extreme weather events. The dramatic events of last year, due to climate change, convinced governments and regulators of the urgency to enhance regulatory frameworks. Indeed, the Italian regulator and the Spanish government are providing positive signals by publishing policy acts to incentivize investment in grid resilience. Now let's go deeper in our plan. The high volatility of the past period is now ending, and we are observing a price normalization. This shift is reflected into our plan assumptions. This business plan is more conservative, assuming lower level for electricity prices, fully aligned with the current forwards. Now let's have a look at the pillars and the key business drivers. We confirmed the pillars of our strategy announced last year, and well, we're starting from the first one: profitability, flexibility, and resilience. The value generation continues to be the driver of capital allocation. Investments are directed towards the best opportunities in terms of risk return, maintaining a flexible approach. Then the second pillar, the efficiency. We'll continue to focus on optimization of processes, activities, and offers portfolio, with no impact of operation and safety. We aim to improve cash generation and capital productivity. We'll expand the concept of efficiency, seeking innovative solutions to extract further value from existing assets, even though the positive impact is not included in the current plan. At the end, the third pillar, the financial and environmental sustainability. We'll maintain a solid financial structure, and we confirm our commitment to address climate change issues. Now let's deep dive into capital allocation. We plan 43 billion of investment, proportionally allocated to reflect the EBITDA contribution. Investment on grid will increase by 40% compared to the old plan, targeting a blended regulated return of 7.2% and a 22% growth in regulated asset base. We continue to be selective in renewables, maintaining the internal rate of return on average 300 basis points over WACC. On the client side, we leverage on bundle offered and loyalty to expand customer base and marginality. Now let's focus on grids. We'll invest 26 billion in grids, more than 75% in Italy and Spain, leveraging on the visibility of regulatory framework and reflecting the contribution to the EBITDA. The increase in grid investment will lead the regulated asset base to grow from the current 43 to 52 billion at the end of the plan. In Italy, in particular, the RAB will increase by 30%, implying a CAGR of more than 9% in the plan period. Regulatory advocacy will play an essential role, as detailed in the next slide. As I said before, a supportive regulatory framework is the main driver to attract investment for the transition. Regulatory schemes need to address several factors, such as a proper remuneration rate and incentive mechanism for resilience and performance improvement. We focus our investment where regulatory schemes are supportive and will direct our advocacy efforts toward this objective. Now let's move to renewable generation. In the next 3 years, we plan to invest 12 billion renewable and to add 12 gigawatt of capacity. Around 65% of investment will be in Italy and Spain, where new regulatory frameworks are expected to support their decarbonization plan. Additional capacity will be rebalanced in favor of wind and storage, resulting in better LCOE and reduced volatility. Hydro remains fundamental in our generation mix. Due to the new capacity, emission-free production on total will reach 86% at the end of the plan. Capital allocation on renewable is extremely flexible and will leverage also in brownfield asset opportunities to enhance our profitabilities. As an example of this, we have just announced the acquisition of a portfolio of hydro assets in Spain at very solid multiples. We've proven our ability to execute disposal at strong multiples and are confident we can create structural value both through asset acquisition and greenfield opportunities. But I want to be clear, in case I don't find profitable investment, I give back remuneration to shareholders. Generation and grids are the underline of make money, not the contrary. On the next slide, I detail our strategy on customers. We'll continue to focus on most valuable initiative and our countries and on countries where we have an integrated position. Our commercial strategy aims at increasing customer loyalty through an ample portfolio of bundled service and innovative products. An example in the virtual solar offer, which allow clients to benefit from real photovoltaic panels without the need for physical installation. At the same time, we'll further optimize the mix of digital and physical commercial channels to enhance customer base management. Now, we have a snapshot of the evolution of the group risk profile. This slide is very important, no? Because we change, let me say, some of our profile. As you see, 64 billion of cumulated EBITDA, that is 90% of the total, will come from regulated or contracted activities. In detail, 27 billion are regulated by design, coming from grids. 4 billion are from power generation covered by regulated schemes. 23 refer to electricity generation sold to customer and contracted through PPAs, mainly in LATAM and North America. 10 billion relate to regulated customer and volume sold at fixed prices. Due to this, visibility on future delivery is higher than ever. Now we talk about efficiency. The result of our action are already visible. In just 9 months, we have achieved 60% of the 3 years target announced last year. Now we raised the target from 1 to 1.5 on the back of our proven ability to deliver. Efficiency and value creation can be achieved also through innovation and new business model. Indeed, we are setting up a new co focused on connection asset to unlock greater efficiency and create long-term value by leveraging on the spark connection capacity of the group. The company will consolidate existing and new connection assets, both of Enel and third parties, handling O&M and construction activities. Thanks to its global scale, it will enable optimization of cost and timing of delivery. The new co will offer valuable solutions to data centers, starting from Italy and Spain, with plans to scale up to the other countries. This new business model is extremely promising. I give you an example. Only considering our Italian connection asset, the valuation of NewCo is around 1 billion. In any case, to be conservative, the numbers are not included in our plan. Now, our financial sustainability. The guiding star of our strategic action is financial equilibrium. Enel's leverage is today much lower than our peers, giving us the financial flexibility to capture market opportunities and maximize value for our shareholders. In any case, our financial leverage will remain lower than the average for the sector at 2.5 times in 2027. Financial sustainability goes hand in hand with environmental sustainability. Indeed, we'll continue to reduce direct and indirect greenhouse gas emission in line with the Paris Agreement goal. For the next years, we have a certified emission reduction target compliant with the 1.5 Celsius degree pathway. We confirm the target to close all our remaining coal plants by 2027, of course, subject to the authorizations. We target to achieve net zero by 2040, when 100% of our power generation will be greenhouse gas free. Our commitment to net zero will preserve also the social and economic context thanks to a just transition plan. Let's now take a look at the KPIs and target. We achieved a significant re-rating in the group performance. For the future, result will continue to grow at a sustainable rate. EBITDA in 2027 will increase at a CAGR of around 7%, while group net income will grow annually by 11% versus the 2022 like-for-like level. We expect a slight increase in net debt EBITDA ratio over the plan period to capture value accretive opportunities. But, as I mentioned before, if we don't time them, I give back remuneration, this is for sure. We now focus on dividend, because it's part of our market-friendly approach. We are confident that our strategy will deliver visible and predictable returns. That's why we are changing our dividend policy accordingly. In the plan period, shareholders will receive a guaranteed minimum dividend of 46%, with potential upside up to 70% payout on net ordinary income. Compared to the dividend policy set last year, we have removed the cash flow neutrality gate, increased the minimum DPS across the plan period, included upside potential linked to the earnings evolution. Visibility on 2024 gives us confidence to propose to the next AGM the payment of DPS of 46 cents, in line with the dividend policy set. Now I leave the floor to the CFO to go deeper in the numbers, and I'll come back later for the closing remarks.
Thank you, Flavio, and good morning, everybody. I will start my presentation focusing on the update of our capital allocation strategy that, combined with the improvement of the core operation, is transforming the business profile of the group into a more resilient one. We confirm the same level of investment in renewable as in the previous business plan, with a refreshed approach that remain selective and, as the CEO told us here, better safe than sorry, if I remember well, is focused on capacity backed by regulated schemes like the contract for differences, and is closing and tend to close the short position that we have in some of the integrated markets, especially Italy and Spain. In this respect, the hydro deal signed last Friday in Spain is a clear evidence that the brownfield opportunities are a good option to shorten time to market and improve the overall risk-return profile, and improving also our production mix. Capital allocation on grids is up again, whereby the proactive attitude across all geographies is accompanied by a magnitude of investment that at the same time can be reactive to shifts of regulatory frameworks in terms of fairness and visibility. As shown by our CEO, the high level of EBITDA coverage for the plan period is confirmed also for the last year of the plan, the 2027 standalone, at around 90%. We look more closely at the business line from the next slide, sorry. When we look at the, at the CapEx for the grids, we may see that the first two parts of the pie that account for approximately 2/3 of the investment will be deployed in recurring network development and to improve network operation, fostering quality, digitalization, and resilience to extreme weather events. Connections will account for around 7 billion as the backbone of the transition evolves to host increasing renewable capacity. This marks a significant step forward in the share of investment contributing to RAB growth that is up by 1.5 times versus the previous plan. Indeed, out of the 23 billion of net capex, means excluding the grants, around 90% will flow into the RAB, that is the so-called RAB-in. I think this is very important because differently from the past, we have seen that the huge investment that was realized in the sector before didn't reflect in the balance sheet a growth in the asset base and the net worth. In this situation where we have already recovered the amortization of the RAB with the level of investment that was in the previous plan, all these huge amount of investment enter into the RAB and increasing the value of the RAB asset at the end of the plan. So just to give a better example and discussion, I will go through the Italian situation to show you that this huge amount of capex has a huge reflection into the RAB, but also the part that is not included in the RAB generates profitability. So when we start from grants, we eliminate this approximately 3 billion of capex, but this amount of money that do not impact on the debt receive a remuneration that is approximately 10% of the amount spent. So also this part that do not enter into the RAB receive a remuneration. 35% of the investment in connection contributes to RAB, but the remaining 65% is recognized as a fee paid by the customer. So again, this has a positive impact into the EBITDA. An efficiency premium on top of these other components is recognized also on the portion of investment that exceed the regulatory cap, and that is also affected by the new fast money concept that was introduced by the recent change into the Italian regulatory framework. As I said before, having already covered the RAB out amortization, the capex flowing into RAB is way up compared to previous plan, and it's what was 1.5 times for the whole group in the Italian space is 1.6 times compared to the previous plan. The resilience project will receive an ad hoc remuneration that is 13% of the invested capital that will be recognized as extra premium in 1 to 3 years, and that is equivalent to an extra remuneration of 1.5, 1.7 for 12 years. In the next slide, we see how the weight of the grids has increased in the recent plan. This has established a solid and resilient contribution financial profile, as I said before. And as you see, the weight is growing almost 10% in 2027. And don't forget that this is compared to the Capital Market Day 2022 to 2025, that was the target related to the disposal plan that include the sale of Peru and Romania RAB asset and distribution asset. Following the changes implemented since last year in capital allocation principles, the weight of EBITDA from grids is set to gradually increase along the plan and will account for 27 billion cumulated over the plan period compared to 22 billion expected for the 2023-2025 plans. It's worth to highlight that it's not just a matter of projections. Grids EBITDA for 2024, that, as I gathered before, we reached 8 billion euro, is set to exceed by 10% the target for 2025 shown in the Capital Market Day 2 years before. This strong and visible growth is supported by the 12 billion high level of RAB compared to the past. Let's now move into the renewable in the next slide. In line with our portfolio strategy, we will invest around 12 billion euro in renewables. Net of partnership and asset rotation, the impact of that would be reduced to 6 billion. That is exactly the amount that we guided in the previous plan. The production is set to increase 70% with a higher share in Europe and US, which account for more than a half of the total at the end of the plan, in line with the geographical allocation of priorities already defined last year. Technology-wise, and this is, I think, the most important factor, we will improve our generation mix thanks to a rebalance in favor of onshore wind, which clearly has a better profile than solar, and storage that is needed exactly to balance the increasing renewables profile. On next slide, we will see a concrete case of how we are improving our asset base and risk return profile, also through the so-called portfolio rotation. I'm referring to the 2 deals signed and announced in Spain this year that rebalanced our generation capacity exposure by selling a stake of 2 gigawatts of solar plants and replacing them with more than 600 megawatts of hydro, which has a programmable and a storage capability that is very relevant, especially in this transitional phase of the sector, and especially in Spain, where we have saw this year how the renewables can impact the market. By comparison, another thing that is really relevant for us is that the brownfield assets have the advantage of not being subject to the permitting phase and the construction risk, enabling us to increase our share of sales to customers covered by own renewable production with additional returns generated, as the case in Spain, by our integrated presence in the market. The transaction is expected to be finalized in the first half of 2025, and the EBITDA contribution is expected to be in the 12 months period of more than 100 million EBITDA, without including the benefit that we have in terms of integrated margin. I'm just referring to the valuation that is based on just the asset in terms as generation asset, not the positive impacts that we have on the integrated part of the business. And talking about integration, we may move to the next slide where we have the integrated business deep down. Geographically wise, we will keep managing the integrated business in accordance with the difference in local market scenarios and Enel specifics. More in details, in Europe we can leverage, as I said before, on a solid and resilient customer base and a distinctive offer portfolio. The increase in renewable production will expand the coverage of the B2C and small-medium business sales, securing and improving cost of sourcing and marginality. In the Americas, power market desires are limited or upset in terms of B2C and SMB client segment, so we will remain focused on fully hedged through PPAs the production that we also consider mandatory in the case we have to take the final investment decision of new plants. Overall, the renewable sales portfolio is largely secured either through the contracted share or through the volumes taken by the retail customers. Hedging strategy takes into account also a buffer that will be used as protection from the risk of losses associated with resource availability. This mostly refers to our hydro capacity. Now I will deep dive the coverage on customer side in Europe. The integrated sourcing sales manager is set to improve on higher renewable coverage and end-to-end profitability. In detail, in Italy, the fixed sales account for 55% of the total, and as underlined in the previous slide, B2C and small-medium business represent the majority of volumes sold at fixed price and are covered by renewable production for 76%, expanded in this way the integrated margin. Indexed volumes instead are naturally hedged by wholesale power prices. In Iberia, we can leverage also on the new production, which brings the coverage of fixed sales from CO2-free production to 90%. Move now to the next slide, where I will detail the EBITDA evolution for 2027. The EBITDA is set to range from 24.1 to 24.5 billion at 2027, as I said. Looking more closely to the drivers of the evolution, grids will represent the bulk of growth thanks to the strong RAB increase in Europe. Generation will benefit from the 12 gigawatt of new renewable addition, offset by conservative assumption we do comprises evolution, as well as the sharp decline of thermal generation on the back of lower volumes. Commodity management activities will continue to normalize. In the plan, we assume a decreasing trend to neutralize also any volatility. Finally, customers' EBITDA growth will be supported by the increasing electrification of consumption that will drive volumes and the bundle of expansion. Moving to the financial plan, next slide, please. We will maintain a solid financial position, leverage on the financial flexibility and cash generation to fund the most of our growth ambition and to guarantee a sustainable shareholder remuneration. The source of fund will reach 52 billion on a cash conversion that is set to increase up to more than 65% at the end of plan period, and the cash-in of partnership and also asset rotation for 6 billion. Over the plan, we expect an increase in net debt as a balance of around 6 billion. That leverage on the financial flexibility achieved with the leverage plan that was successfully implemented will drive to a net debt-EBITDA ratio that is continued to be at 2.5 times, one of the best in the sector. Moving to the refinancing strategy, over the next year we expect to raise around 31 billion of funds, of which 27 would be issued at centralized level, bringing the percentage of centralized finance on total at around 90% in 2027. The overall cost of gross debt will be lower 4%. We expect 3.9% at the end of the plan, as a result of the lower exposure to non-core geographies and the continued focus on sustainable finance that we are increasing our target for 2027. We expect that sustainable finance will reach 75% as the total, that is an increase of 500 basis points compared to the previous plan. Finally, it's worth to highlight that around 3/4 of our debt is or has been swapped into fixed debt that protects us against any fluctuation of interest rate. Finally, I will comment briefly the soundness of our liquidity position that amounts to approximately 28 billion euro, that covers more than 1 time our refinancing activities. We can go directly to the targets. To conclude, yeah. As the CEO has already shown the targets for 2027, I will discuss about the 2025, where we expect to reach an EBITDA that is ranging from 22.9 to 23.1, and the net income between 6.7 and 6.9, with a compound annual growth rate of 10% and 17% respectively versus the 2022 like-for-like. And with this, I hand over to Flavio for some closing remarks. Thank you.
Thank you, Stefano. The business plan we presented today is focused on core activities, and it's open to innovative solutions to unlock future value. We have always in mind our shareholders' remuneration, and all our action and investment are in this direction, as our interests are fully aligned. And this is why we accelerate investment on regulated assets with stable and predictable return. We focus on core activities, businesses, and geographies to enhance visibility and drive long-term value creation. And we continue to maximize cash generation to maintain a solid financial structure. This plan confirms the change of Enel's mindset. We are focused on maximizing efficiency and profitability across all businesses and geographies, leveraging also on the flexible approach on capital allocation.